Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look and take a look at the dollar versus Canada. We have the Bank of Canada interest rate decision coming up, where the expectations are for a cut of 50 basis points. At the same time, the dollar versus Canada is trading near the highest levels going back to early August. So going into this rate decision at the highest low Canadian dollar levels. So the market is expecting this 50 basis point cut. Do we get follow through buying in the dollar versus Canada, or do we have a situation where we have sell the news type of reaction? I'll go through those technicals in this video, so let's get started. I had outlined this area as a key target on the top side ahead of the high prices that we saw in the month of August. And right through here, and here. This area was defined by a number of different swing highs and lows going back to this period right through here. We can see how the market kind of fluctuated between trading below it and trading above it. The last thing that we did was move below the level and then come up to the level, test the high of it, move lower, and have one little wild hair right here where the price moved above the high of this swing area right through here before starting its run to the downside. So that defined that swing area, and lo and behold, it held resistance in trading last week. It held resistance in trading earlier this week, and is now being tested at the highest of the extreme as we head toward that interest rate decision at 9:45 a.m. Again, the Bank of Canada is expected to cut rates by 50 basis points. That should weaken the Canadian dollar in a normal situation, but the question comes, will we get that follow through buying? If we do see the buying, we need to get above the 138.64 level, and if we get above that level, then look toward the 138.80 to 88 level before it opens the door for a move toward the high price that we saw in the month of August. So those are the targets on the top side, and we want to see the price step through those levels on an interest rate cut of 50 basis points to prove that, well, it's not all priced in, and that there is room for further dollar buying, further Canadian selling, and so those are the levels to watch for. What we don't want to see for the dollar Canada bulls is a move back below the low of this swing area, 1.38337, and a run back down toward the low price for the week. Or actually in yesterday's and early trading today at 1.3813. Get below that level, we'd have traders looking toward the swing area down here near the 1.389 level, and ultimately, if we break below that level, then look back down toward the broken 61.8% retracement, which happened to be the low price that we saw in trading last week. That area comes in at 1.37449. So, I must admit that the risk through this number or through this decision is quite high. The market has been trending to the upside. There could be that sell the fact type of news, but I still would like to see the price fail potentially on the upside and then move back below this level before moving to the downside for this pair. And if the price does, however, move above the 47 level and starts to take out the other levels up here, then obviously the trend is still intact. This is just the continuation of what has been a sharp move to the upside in the dollar versus Canada. So that's my look at this currency pair as we head into that interest rate decision from a technical perspective. Lots of risk going on in that pair. You can also sit out it and wait for better opportunities, but certainly the decision becomes the market's decision. Are we overbought and due for a correction, or do we see further Canadian dollar weakness? That's what's going to be determined at 9:45 a.m. Stay tuned. My name is Greg McCloskey. Good fortune to trading. Bye-bye now.